What's up, guys? Stacy here from Becoming Financially Fit. And this is going to be an update of my Robinhood portfolio. So far I've been investing for about a month now, and it's been a little over 2 weeks since I did my last investment. So today I'm going to give you guys an update about how my portfolio has been over the past month, and also the new stock that I put into my portfolio on the 15th. But before I give away too many details, this is my Robinhood $1 million portfolio. Let's get into it. Before we get into the content, I make videos about personal finance, financial literacy, savings, and investing. So if you're interested in any of those topics, make sure you subscribe to the channel and don't forget to hit the bell to be notified anytime I post new content. Also, if you guys want to invest alongside me and start using the Robinhood app to start building your portfolio as well, I'm going to leave a link down in the description below that gives you guys a free stock when you first join with the Robinhood app or the Robinhood website. So if you guys want to get started in your investing journey, make sure you check out the link below to start your Robinhood portfolio. And also, if you used the link before and you did get a free stock, make sure you drop a comment below and let me know what free stock you got when you signed up using my link. So other than that, let's get into that stock that I bought this week to expand my Robinhood portfolio. So without further ado, the new stock for the week is going to be Restaurant Brands International Incorporated. It's going to be ticker symbol QSR. QSR was formed on August 25th of 2014, which is fairly recent, and is headquartered in Toronto, Canada. They franchise and operate quick service restaurants serving premium coffee and other beverage and food products under the Tim Hortons brand, fast food hamburgers principally under the Burger King brand, and chicken under the Popeyes brand. They're one of the world's largest quick service restaurant or QSR companies as measured by total number of restaurants. As of June 30, 2019, they franchised or owned 4,872 Tim Hortons restaurants, 18,008 Burger King restaurants, and 3,156 Popeyes restaurants, for a total of over 26,000 restaurants. And they operate in more than 100 countries and U.S. territories. Approximately 100% of their system-wide restaurants are franchised, which is good to know. So, some things to note about QSR. I invested in the stock because the bulk of their revenues and their earnings come from things like franchise fees, lease operating fees, and they really don't come from the sales of the products. Since this company is more of a fast food chain, they operate fast food chains and things like that, you would expect that most of their revenue would come from the products that they sell. But since their prices are not that high for things like Burger King or things like Tim Hortons, they're quick service, you can get in and get out, they're really focused on volume. And where they really make their money is from the franchisees who they're actually renting out their brand to. So it's good to note that they're not just locked into the fact that if they can't sell a product, they're not going to make money, because they are still making money off of these operating leases and the franchise fees. It's similar to a model how you would think about McDonald's. They make the bulk of their money from real estate and real estate transactions or through leases as well. One of the big things that stood out to me about the QSR company is they're on track to make $1 billion this year alone, which is crazy to think about. And that $1 billion is net profit, not revenue. When I was looking through their financials, I did notice something that was a little alarming to me. About 60% of their revenues comes from Tim Hortons brand, and 30% comes from Burger King, and only 10% comes from Popeyes. I really invested into this company because they do have a diversified portfolio of well-known companies, but it is a little concerning to see that the bulk of their profits are coming from a restaurant like Tim Hortons and the franchise Tim Hortons, because if that starts to fail, then you might see their net income and their revenue start to go down as well. I will also note that I did see that about 90% of their revenues and their net income is generated in the US and Canada. So although they are in 100 different countries, they really don't have a global presence where they can bring in money. So I do see this as being one of their growth opportunities in the future, whereas if they actually have a campaign of spreading out worldwide and trying to dominate on a global scale like a company like McDonald's, I think they're going to increase exponentially in terms of stockholder value, but also stock price and bottom line net income. One of the main reasons why I got into the QSR stock is because of the franchise that they operate, Popeyes. So if you guys remember back on August 12th of this past year, so a couple months ago, they launched the chicken sandwich. And for many, you would just think this is a regular sandwich, but for Popeyes, it was an explosion of social media madness. They got a lot of coverage in the news, and everybody wanted this sandwich. It was so popular that they sold out in about 2 weeks. And it's the middle of October right now, and they still haven't brought it back to their menu. I think that this is going to help out their sales so much, and it's going to boost their bottom line because people are waiting for this particular product. And even though it's a chicken sandwich, it's competing with other companies like a Chick-fil-A or a Wendy's. And you've probably seen the social media back and forth between those companies. But I think this is going to be a differentiator for the Popeyes franchise and for QSR brands as a whole. But I'm not going to give you guys all of the good without going into some of the bad. And I will say that they have a lot of fierce competition coming from all sides. In each one of these different categories, they have companies that are competing with them head to head. And I've mentioned the company that everybody knows before, but when you think about a company like McDonald's that has global scale, that dominates in any market they can go into, that's going to be their main competitor. And I think that they need to focus on them going forward to make sure they can expand their brand. Also, I will note that not everybody goes to these companies as their first choice. I would say Burger King would be a second choice to McDonald's. Popeyes might be a second choice to something like a KFC or a Chick-fil-A. And Tim Hortons is mainly in Canada. So a lot of US consumers don't really know about the brand as much. But I think that over time they can add value and bring their shareholders some profits in terms of expanding into these global markets and actually increasing shareholder value in the future. All in all, I think that QSR brands can be a market leader in the future with some of the brands that they operate. I've been to each and every one of the franchises from terms of Tim Hortons, Burger King, and Popeyes. I love all three, and even though they do have some supply chain issues, I think they're gonna make it through. And I think that once they bring back that chicken sandwich from Popeyes, I think they're going to be a game changer. So although I do have some risks investing in a company like QSR, that's the risk of investing, so that's why I'm gonna put it into my portfolio. Now guys, just diving into the portfolio, you can see I have a total of $283.71 invested right now in the stock market. And so far you can see the breakdown. Right now I have Uber, 2 shares of Uber, which you guys previously saw me purchase at an average price at around $32.14. So it's a little under my average cost basis. But throughout the week it was actually doing pretty well. So I think that'll bounce back. I do have 1 share of AT&T, 1 share of Ford, 1 share of Tencent, a share of Square, and also a share of QSR that I recently purchased this week. It's a little bit down for the week. I purchased at, let me see what I purchased at. Yeah, I purchased at $70.62, but it's been a little down for the past week. But I think they'll be all right. They do have earnings coming up in about a week or so, a little over a week. So it's going to be interesting to see how the chicken sandwich from Popeyes affected their bottom line. But just looking at some other ones, I think right now Ford is the only company that I have right now that is up. They're up. I bought in at an average cost of around $9.37. Oh, it looks like they're down about 7 cents. Let me go back into AT&T. Okay, yeah, AT&T is the company that's up. They were actually doing really well this week. They're up about 2.47% this week, and for the month about 4.82%. So I'm doing pretty well in this investment. I do think that I'm pretty spread out. I have Uber. That's I would think about that as a tech company. AT&T more of a communications company. Ford in that auto industry. Tencent, they're a do everything company, similar to like an Amazon or something like that, but they really don't have the products like an Amazon. Square as well, because I love their products and what they're doing and their services that they're coming out with. I think the services from a company like Square going forward is going to be their differentiator. Let me get into the stock just so I can give you guys an example. So over the past month, they're up about 1%. I think they're going to be breaking out. So their 52-week high was $83.20. So they're trading at, for me, I would think it's going to be a pretty nice discount. So hopefully we can see that bounce back up into that $80 range. My portfolio is a long-term portfolio, so I'm going to try to stay invested until I hit that $1 million mark and then start to diversify, maybe getting into some bonds or other things like that. But yeah, that's just a quick overview of my portfolio. Right now, like I said, I'm at $283.71 over the past week. I'm up 0.87%. Over the past month, I'm down 0.86%. So we'll see how it pans out. I think I'm going to either break even or be up by the end of the year. And like I said, my goal for the end of the year was to have at least $1,000 in there. I think I can definitely hit that, just because I try to put money in periodically. But yeah, so that was just an update of my portfolio thus far. What I usually try to do is put out a video every single 2 weeks. So I have automated deposits set up. So every 2 weeks I have money going into my portfolio. I might pick out some stocks throughout those upcoming weeks and I invest in them. If I see a good opportunity in between that, then I'll invest in that and I'll give you guys an update in the meantime. But that was an update of the new stock that I put into my portfolio, QSR, and also my portfolio update for the past month, the first month of investing in my Robinhood app $1 million portfolio. So if you guys like the content, make sure you guys like the video and also subscribe to the channel, and don't forget to hit the bell to be updated anytime I post new content. But other than that, today was a quick update of my Robinhood app $1 million portfolio, and I'll see you guys in 2 weeks.